Nigerian Television Authority and the Nigerian Stock Exchange to strengthen partnership. Federal government to establish automotive industrial parks in 3 states. Nigeria to convert $25 billion of CBN finance into 30-year debt. House of Representatives condemns $750 million yearly loss to gas flaring. Plus, Asia-Pacific stocks sleep as investors watch Treasury yields. This is Business Express on the network service of the NTA, and we are reaching you from Abuja, Nigeria's capital. I am Musa Abubakar. And let's bring you up to speed with business development. The federal government, in a bid to foster the domestic production of vehicles, is set to establish automotive industrial parks in Anambra, Osun, and Kaduna State. The Director General of National Automotive Design and Development Council, Jilani Aliu, says the 3 automotive industrial parks will be comprehensive facilities where the necessary infrastructure will be provided and investors can easily come in and play. And as the federal government is promoting local production of vehicles, key to that is creating the necessary environment, and that has been done with the automotive policy. Now, Nigeria's federal government has set the terms for the conversion of its stock of central bank overdrafts into long-term notes in a bid to create transparency around its dependence on that source of funding. The 10 trillion naira debt will be exchanged for 30-year notes issued to the central bank. Head of the Debt Management Office, Patience Oniha, said the agreement to timing for the conversion needs to be finalized to get the required approval from the cabinet the earliest in the second quarter. The dollar advanced on Wednesday, hitting a 4-month high against the yen as U.S. bond yields jump on prospects of further economic recovery and a possible acceleration in inflation. The Nigerian Investment Promotion Commission, NIPC, says it tracks $16.74 billion investment announcement in Nigeria for the year 2020, representing 44% less than the $29.91 billion tracked in 2019. NIPC also noted that the manufacturing sector attracted the most investment of $8.4 billion, representing 50% of the total investment, as well as the highest number of projects. The drop in value could be attributed to the economic impact brought about by COVID-19 pandemic, which disrupted not only the Nigerian economy, but the global value chains and capital flows. The NIPC further stated that it tracked 63 projects across 21 states and the Federal Capital Territory during the year. 24 of the projects were planned for Lagos State, followed by Kaduna and Ekiti states, with 5 projects each. Now, the end of trading on the floor of the Nigerian stock market for Wednesday, the Director General of the Nigerian Television Authority, Yakubu Ibn Muhammad, rang the bell, signaling the close of trading for the day. This is to further strengthen the relationship between both organizations.
Though the market has been in red, I do hope that my appearance today on the platform will change the fortunes of the Nigerian Stock Exchange for the better. It is worthy of note that the NTA has been a partner of the capital market in providing uninterrupted dissemination of information to the public since the late 1980s. As the Nigerian Stock Exchange goes about supporting listed companies through raising capital and investing sale, we have watched the Nigerian Stock Exchange grow its fortunes from its modest beginning in 1961 with a volume of about 80,500 British pounds, with a total of around 38.5 trillion naira, with 1,328 companies in active status today.
Now traded on the floor of the Nigerian Stock Exchange this Wednesday closed in a negative territory. The oil share index depreciated by 0.07% to close 40,465.32 basis points, with market capitalization at 21.1 trillion naira. A total of 241.8 million shares worth 2.6 billion naira exchanged hands in 4,008 deals at the end of the day's transaction. Now, to shed more light on the factors responsible for the bearish trends the Nigerian stock market has been recording in the month of February, is a professor of capital market, Uche Walike. You're welcome to.
Yeah, thank you, Musa.
Okay, we've seen in the month of February, we've seen a run of bearish run, and only on Monday we saw a positive, then back to bearish. What do you think account for that?
Yes, well, I would say profit taking.
Okay.
Profit taking in the sense that, if you recall, the lingering positive sentiments we had in the month of December and right through the last quarter of 2020, which filtered into January, continued. Such that the month of January closed on a positive note. So what you might find happening now is simply profit taking, and this is something that started, if you recall, 2 weeks ago. The week before the last, the market dropped by as much as 1.6% week on week, and last week again we also saw for the entire week. 2 weeks ago, for the entire week, 5 straight days, negative performance. The week last week, we also had the same performance, except for Thursday of last week. And then this week, the negative sentiments have continued. And as I said earlier on, I would attribute that to profit taking, because usually when stocks have gone up considerably, you tend to find people investors who want to also sell in order to take a profit. So that's one. The other thing I also think that could have triggered the bearish trend we've seen in recent times could be the announcement effect, if you like, of the IMF recommendations for Nigeria. IMF is recommending that the country should not only increase the value-added tax, but should also, in effect, devalue the naira. Okay, IMF is also advising the central bank to tighten monetary policy. Now, all of that would have an impact on the stock market in a negative way, because once the central bank tightens monetary policy and increases interest rates, okay, you will see equities performance going down, because the major thing that drove equities last year and in the month of January happens to be the fact that yields in the fixed income were low. So interest rates low environment have fostered investments in the equities market. So any moment, if people expect that interest rates will go up, they will begin to sell so as to get money to switch positions. So I would say the expectation that interest rates would go up, arising from the IMF recommendation, arising again from the fact that maybe liquidity may have been squeezed or is going to be squeezed by the cryptocurrency directive again, from the central bank. That could also be partly responsible. And of course, again, rising inflation rates is not usually good news for this equities market.
Okay, what do you think could be done quickly to reverse the trend?
Yes, is the normal feature with stock markets. Markets will always go up and go down. As I said, once the equity prices are not reflecting the fundamentals, what we call the fundamentals, the company's performance. Once you see a mispricing taking place, investors will take advantage of that. So if you have a market that is up, you should expect that the market will also come down because people will want to sell. So for us to sustain, if you like, the positive sentiments in the market, the macroeconomic environment has to be stable. We don't have to have fears about increase in inflation rate. We don't have to have fears about devaluation of the currency of the naira. Okay, and we don't also have to have fears about rising interest rates. So once there is stability in the macro economy, including the fact too that oil price is still doing well, that will engender, that will incentivize investors to be in the equities market. So the way to sustain it is to make sure we have a stable macroeconomy, we have a low interest rate environment that will encourage investors to be in the equities market, in the stock market.
But this bearish note, is it a reflection of Nigerians' current economic challenges, or is it a global thing?
Yeah, it's I wouldn't say it's a reflection. The bearish is just the last 2 weeks, so I wouldn't say it's a reflection of the entire macroeconomy. Mind you, even last year, when the economy was reported to have contracted, sharply, second quarter of 2020, even the third quarter of 2020, the ones we know, okay, the market, surprised on the upside. So in spite of the contraction we had in 2020, the market was the best, in the world. So I wouldn't say it's a reflection of, after all, the economy it's, said to be gradually turning the corner. There's the expectation that before the end of the quarter, we should be able to report a positive growth in real GDP. And that means we are out of recession. So what is happening now is not really a reflection of the economy. It's simply a reflection of the factors that I've told you. The expectation, of investors about going on in the market, including interest rate direction, inflation rate, direction, and possibly again the expectation that the naira may still go down. The value of naira may still go down. These are things that make investors apprehensive, and so they want to sell. You want to sell because you want to have cash to be in a position to go elsewhere in case the equities markets.
Okay, now if this trend continues, do you see many Nigerians trooping into foreign stock markets?
I think our markets still competitive, still attractive. As you know, in 2020 it was the best, returning 50%. Even as we speak, the year-to-date return is still positive, although very minimal. Okay, our markets still remain investors delight, and that's because of the resilient nature of the market, and even the resilient nature of the Nigerian economy, especially now that oil price is doing well, especially now that we're also expecting to get out of the recession. The good thing is that the government has started implementing the 2021 budget. So we want to see much of that liquidity again flowing into the equities market. The central bank also has been engaged in a number of interventions, which again is ensuring that some liquidity is also left in the system. As I said earlier on, the bearish nature of the market is not something that may persist, although I had predicted that yes, this 2021 may not be as fantastic as we had in 2020, but will still be in the positive territory. So one should expect that maybe in the few weeks ahead, we'll also have a reversal, and the market will pick up once more. Remember, on Monday, it was positive. So that we have had negative performance yesterday and today doesn't mean that all hope is lost.
Okay, how soon can the negative change?
One might not say it's going to change tomorrow or next tomorrow, but looking at our markets and the factors that really drive performance in the market, I think I will always continue to express optimism that this is one market that won't disappoint.
What would investors see to get that confidence?
The next trigger we're expecting now that will trigger the market will be the first quarter results of companies. Any moment from now, a number of companies will be releasing their 2020 audited annual reports, including some too will be releasing first quarter of 2021. So all of that, companies' performance, companies' earnings will trigger a lot of interest in the market, such that we'll now begin to see a reversal of what we already have. So by March, April, once companies' results, tend to, because as they come in, they tend to influence the stock price, especially when a good number of them, come up with, positive performance. So investors generally respond by pushing up the share price of those companies. So that's usually what happens. Bullish behavior tend to follow companies, release companies' corporate actions, especially when they're positive.
Okay. Thank you very much, Professor Uche Waluke.
My pleasure.
Okay. Now moving on, Asia Pacific stock sleep as investors watch Treasury yields. Taiwan surged 3%. Negalco has details.
Stocks in Asia Pacific were mixed on Wednesday as investors monitored bond yields following a recent rise. In Japan, the Nikkei 225 slipped 0.58% at 30,292.19, while Hong Kong's Hang Seng Index gained 1.1% to end its trading day at 31,084.94. Markets in mainland China remained closed on Wednesday for the Lunar New Year holidays. In Europe, stocks retreated slightly on Wednesday as investors monitored rising bond yields and the outlook for inflation. London FTSE dipped 0.18% at 6,736.82. Germany DAX 0.27% at 14,022.08, while CAC 40 of France also depreciated by 0.04 at 5,784.41. U.S. stock index fluctuated in early trading on Wednesday after the Dow closed at a record high. Overnight on Wall Street, the S&P 500 closed 0.6% lower at 3,932.59, while the Nasdaq Composite declined 0.3% to end its trading day at 14,047.50. And in Africa, markets were mixed as South Africa JSE Top 40 and Namibia Overall Index posted gains, while Kenya's Nairobi All Share, Tunisia's Tunidex, and Ghana GSE started on a negative territory. That's Global Markets. I am Nneka Oko.
The House of Representatives says Nigeria is losing about $750 million to gas flaring annually. It added that flared gas could have been used to generate electricity for the country. The federal government has, however, said it is committed to eliminating gas flaring by 2025, adding that ending gas flaring will allow the country to harness its gas resources for maximum economic benefits and in compliance with Paris Agreement of the United Nations Framework Convention on Climate Change. Gold prices fell on Wednesday to their lowest in nearly 2 weeks as the dollar firm and U.S. Treasury yields rose, while platinum eased further after scaling a more than 6-year high in the previous session. The oil prices fell in early trade on Wednesday as the U.S. dollar climbed, retreating after a 2-day rally that was driven by an Arctic blast curbing output from oil and gas fields in Texas, the country's biggest oil producing state. U.S. West Texas intermediate crude futures gave up 33 cents to $59.72 a barrel, retreating from 13-month high of a $60.95 hit on Tuesday. Brent crude futures dropped 40 cents to $64.95 a barrel, coming off 3 days of gains. Now, this is where we end this episode of the program. Don't forget you can access this and all previous episodes on YouTube, and you can also communicate with us on Twitter, and the handle is NTA News Now. The hashtag is BizX. We value your feedback. Do join us again on Wednesday at 3 p.m. for another package. I am Musa Abubakar. Stay safe.
She cries in anguish and in pain. She bears the scourge of her grief. She toils in vain for justice and succumbs to silence.